Hello, I'm Tammy Green, and welcome to this week's edition of Your Week in Forex with your favorite Forex broker, UFXBank. This week, the surprising political news out of the UK revealed a hung parliament. After negotiations between the major parties in Britain, Cameron was appointed as the new Prime Minister of England. The European Union finally decided on an extreme rescue package for trouble-laden Greece. Almost $1 trillion will be spent to help the region's debt from spreading. At first, this created a jump in the euro, but further speculation caused investors to start doubting that even a plan this extreme will be enough. Martin Smith will join us today for a review of last week's market highlights. Now let's go to Martin Smith, financial analyst, for a closer look.
Hi, Tammy. Well, there's a lot of news from Europe this week, so where would you like to begin?
Let's start off with David Cameron, the new Prime Minister of England. I know he has a lot ahead of him, but where do you think he will stand with his relationship with the faltering Eurozone?
Well, of course, there are opposing attitudes in Cameron's coalition regarding the European Union. So to be honest, I see him keeping his distance, at least in the beginning. You see, Cameron falls along the same lines as Prime Minister Margaret Thatcher, who was also part of the Conservative Party. And in 1984, she informed European leaders that she wanted Britain's money back.
So the Liberal Democrats are more in favor of joining the Eurozone?
Well, Nick Clegg, the Deputy Prime Minister, is also a full member of the European Parliament and has been an outspoken advocate for switching to the euro from the pound. The two sides know that they have very different approaches to Europe, that they're aware that there's a bit of a trap that's awaiting them. So reconciling these conflicting views on Europe will be the biggest challenges that this coalition faces, I believe.
So how will this affect England's relationship with the rest of Europe?
Well, it may be a difficult road in the long run, but we've seen this same problem with past prime ministers, such as Tony Blair, who reached out to other EU countries in the beginning of his term, but wavered in the end.
Doesn't it seem a little illogical to join this debt-laden union that's having so many problems right now?
Well, that's it, really. The lack of large-scale EU revamping plans will help Cameron's cause to stay out of these muddy issues in Europe.
Just quickly, what is Cameron's plan for UK's domestic issues?
Well, the BOE, the Bank of England governor, endorsed Cameron's plans to cut the huge budget deficit last week. Now, Cameron's new government must plan an emergency budget within 2 months. By getting this support from the BOE, Cameron should be able to position himself politically in a favourable position. Economic priorities will include tackling the deficit and also the banking reform. Now, Cameron's proposing £6 billion of spending cuts in this fiscal year alone. Some, of course, are refuting this idea.
So now what is going on in Greece besides the rioting we saw last week and just general social unrest?
Well, a monumental $1 trillion is going on, that's what, and this will be spent on the region to try and keep this crisis from snowballing. Yet it is just a safety net. What's going on above that is still broken. The package that was approved included a pledge from the European Central Bank to buy government and private bonds to stem a surge in borrowing costs among so-called peripheral nations such as Greece, Spain and Portugal. Yet sentiment is just really low right now.
Do you have any technicals for us for the euro-dollar?
Well, while the euro-dollar bounced ahead of the 125.20 level, its 2010 low may occur if tested. I expect that an eventual break will happen and generate further weakness towards its 2009 low at 124.56. Now, this should open the door for weakness towards its 2008 low at 123.28 and maybe even lower. Alternatively, we will have to see a break and a close above the 130.93 level to reverse its present downside pressure and bring more strength towards the 131.13 level, which is its April 28th low. Now, this level should reverse roles and provide support, thus turning the pair lower again. But all in all, the euro's bearish momentum remains intact as it looks to retarget the 125.20 and 124.56 levels.
Well, thank you, Martin. You know, most of the times your technical analysis is spot on. Until next week, I'm Tammy, and this is your Week in Forex. Don't forget to visit us at UFXBank.com for simple, safe, and secure trading. Now you can also follow us on Twitter and Facebook as well.